Trading without understanding liquidity is like driving a car without fuel, especially when it is up the hill. Now, I had to spend a lot of time and made millions of mistakes before I understand how liquidity works, how smart money traders trading with the flow. Imagine that you are rowing your boat with the current. You don't have to row, you just need to follow the flow. Similarly, when you understand the liquidity, you know that when the smart money coming in the market. And that's what I'm going to explain in this video today. Now, this is one of the most important concepts that I use in my trading. As you can see, every day we talk a lot about the liquidity. So let's understand what is liquidity and how you can get benefit from it straight away as soon as you finish this video. So before I progress further, trader, make sure that you give a thumbs up and also subscribe to the channel if you haven't done yet. So without further delay, let's begin to understand what is liquidity and how you can trade this in the market. Okay, so let's begin first with a diagram, and then we'll be going to the real chart with quite a few real trade examples that we have traded recently in the academy. Now, first of all, let's look at a typical market structure. Market structure is the backbone of the market. As you know that Nikola Tesla once said that if you want to know the secret of the universe, then think in terms of energy, frequency, and vibration. If you want to know the secret of the market, then think in terms of market structure, liquidity, and price action. And 70% of most successful traders take their trading decision based on the market structure. Now, what you can see on the screen, this market structure is bullish. Now, if you closely look at it, we can see that there is a series of higher high and higher low, which is a typical uptrending market structure. Now, when the market moves like that, we also need to know why it moves like that. As you know that the market is moved by the smart money. As a retail trader, we just follow their footstep. That means that when there is a movement, especially bigger movement, there is a smart money trading coming in the market. So if you closely look at here, you can see this is the previous resistance, which is turning support here. And the market structure is bullish. Now, if you closely look at when the traders were trading from, for example, from this point, those who started to buy the market, the price has gone up as when the buyers coming in the market. And then once traders started to take profit, the market come down for a pullback. And again, there is another buying happen. The market has gone up for another movement. Now, when the price create a swing low and the price break this previous swing high, candle close above, the liquidity moved from this point to this point. Now, we need to understand why, because there are two reasons. The first reason is a lot of traders who already have bought from those levels that trail their stop loss below the previous swing low, as if the market breaks this low, which is basically a potential break of trend. The other reason is new buyers coming in the market as the pullback is over and there are more people coming in the market. And there are two reasons why there is a high liquidity below this swing low in this uptrending market. Now, what happened at some point, as you know that the trend will never move in one direction. At some point, there will be a break. Not an outbreak, just a break. And that break brings new momentum in the market. And that's where smart money again coming in the market. Now, let's understand why this is happening. As you know that intellectual curiosity makes a better trader. Always asking why is always helpful to know how the market moves. So if we look at there are plenty of stop loss in this area. So let's understand why there are so many stop loss that we have known. Now, why it is a very interesting area for the smart money. Now, as you can see that in this market, there are more buyers than the seller, as it is an uptrending market. Now, a buyer's stop loss is in fact a sell order. Yes, I think it's a matter of surprise. You might say, okay, I am buying, but why I'm a seller here? This is the trap, because every trader thinks that I'm a buyer here, so I should be a buyer. But your stop loss in fact is a sell order. That means that in this level of price, for example, what we can see 1.13602, when you place a buy order to your broker, then you are in fact saying that if the price drop back to this 1.13602, I am willing to sell. Now, when you are selling, there must be a buyer on the other side again, and that's where the smart money, because as there is a huge volume, a tremendous number of stop loss in this level, and new buyers who put their stop loss in that area, that is now becoming a sell order, and then where the smart money buying again from this level, because this level is now a very important level to look at. The market gained momentum and it shoot up again for another flight to the upside, which is what we call the liquidity grab. Now, why it is important to know? Well, when you see an established trending market and then there is a break of the structure, especially on the first break, there is a high chance for the market to bounce back up, and especially the retail trader trap, because impatient traders started to think that, okay, the market trend changes, there's a break of structure, I was waiting for the market to reverse, and I started to sell just to see that when they started to sell, the market bounced back up. So by understanding, you also can use that liquidity to trade the market. Now let's see quite a few examples on the chart that we have traded using the same concept, guys. Don't miss out any part of this video. That will be really helpful to you. Okay traders, so let's see this example. This is euro dollar 1 hour chart. Just to let you know that this strategy works in any instrument, any time frame, any indices, crypto, forex or stocks, in any instrument. So make sure you pay full attention to it and also watch over and over again to understand how the strategy works. So looking at euro dollar from the 1 hour chart, now you can see that there is an established uptrend in that area, which is a move here followed by narrow pullback. Now this is maintaining an uptrending market structure, a movement pullback, and we can see another movement, and then we saw that the breakup structure. Now you can see that in this uptrending market, the price had a move, pullback, another move, pullback, and you can see that the another move, that's where you can see the breakup structure. This is what we exactly need to know when we are trading the market. Let's look at that, how it is working here. Now you can see that here is the move, pullback, another move, and this is the 1 hour candle on euro dollar. Now look at this, how the price reacted to that level. When the price dropped down for a pullback, it has made another bounce, and then the price managed to break below all this low, and after break of this low, grab that liquidity, because after this doji formation, a lot of buyers started to buy this market from here, putting the stop loss below this low, and they might started to buy a lot just to see that another wave of drop has come back below this support, grab the liquidity, and then has got another bounce to the upside, which is a very strong bullish momentum. And that's what we can see, that the price started to move back up, and we can see that with this momentum the price created another flight to the upside. Now we can see the same kind of liquidity grab in this area as well. Now what we can see here, a big move, pullback, and another move. We can see that the same kind of breakup structure, guys. As I mentioned, it happens over and over again in the market. Once you understand it, it becomes much easier for you to grasp the concept of liquidity so that you can trade like the smart money. Now this is the 1 hour candle, as you can see, has broken all this support level, and after break of this support we have seen the grab liquidity and then bounce back with a bullish engulfer, which is another strong liquidity grab. Now to understand more precisely also, we have our strategy. Now you can see this tool also helping me to understand how to identify that liquidity candle, the candle that has grabbed the liquidity, and this is unique to us in the academy. The strategy as well as the indicator also available for you to access, guys and girls. If you still with me in this video, then don't miss out to join us to access the liquidity candle, and this is one of my favorite trading strategy. You can find link below this video in the description. Visit the website and also join the free Telegram channel to know more about the liquidity candle that we are trading every single day. So now let's look at other instruments such as the gold on the lower time frame, how it is working in this instrument. Okay, so let's look at now gold on 15-minute chart, how the liquidity candle and the strategy of liquidity grab is working. Now you can see that this is the 15 minutes on gold, and with that 15-minute chart there is a very strong uptrend followed by a pullback, another uptrend followed by deeper pullback, and the market is forming series of higher high and higher low in this uptrending market structure. Now in that uptrend, what we can see that on gold, this is the gold chart, and there is a if you closely look at, we can see back to back quite a few liquidity candle formation. There is one here with a very strong momentum. We can see that in this market, and also there is another liquidity candle formation, and most of them are highly winning candle. Now you can see there is one here in this area as expected. There's a bounce, break of structure, again another bounce, and we have seen there is back to back two liquidity candle followed by, we can see another liquidity candle in that area, and all of them has gone bounce to the upside to create a huge movement. And that's the power of understanding liquidity, how the smart money is trading, and also to know when to find the best trading setup with proper risk management. Now let's see a couple of real trade examples to grasp this concept precisely. Okay, so let's look at these two live trading example. Probably you have seen that in YouTube live that we have traded using this concept of liquidity. Now this is the 5-minute chart on gold. Now you can see that here this is 5 minutes candle that's formed with break of this all this low gap, a huge amount of liquidity, and the price has got a huge bounce to the upside, created this move. Now what we have seen that once the market grabbed the liquidity, the price has started to move back up and has gone to the profit target. Though we have closed that trade nearly to the break even, the next trade has given what we need. Now if we look at the next trade, we can see the same concept. This is the 5-minute chart. Now if we look at turn on our liquidity candle, we can see that the price in fact formed that liquidity candle, and from that level there was a huge bounce to the upside, created this momentum, and we can see that from that level the market has made this huge movement towards the upside to create a new higher high. Now when we combine this liquidity candle strategy along with other factors that fully explained in the strategy with full demonstration video also available for you in your premium student dashboard on the academy. So if you are still not there, I invite you to join to know more about how I am trading using this strategy, and also how I am using this liquidity indicator to trade the market every single day. I strongly believe that guys, you enjoyed this very important educational video. If you enjoy, make sure you give a thumbs up, and also don't forget to subscribe to the channel. With that said, thank you, and I'll see you soon in my next educational video.